HIMS stock is finally going down. The stock is down 9.5% over the last 5 days. It's down around 17% from its latest high. And many of you guys have been asking me, what is the right spot to be buying HIMS at? What is the right fair value or the right price where you could buy this and it's like easy money? And I've been giving you guys price levels since I've been talking about the stock from $7 per share. And my last price level, I told you under $30, HIMS is a steal. Like, it's hard to lose money under $30. And many of you told me in the comments that you bought the dip under 30 because I said it was a steal. And I have another level where I believe HIMS is a steal, what I believe is a sweet spot to really be buying the stock, and a spot where I believe it's really hard to lose money over the long term if you buy HIMS at this price. Because I love HIMS, I love the company, but I'm not a cult follower. I'm not going to tell you that HIMS is a buy at any price. I'm not going to hype the stock. I love the company, but if you pay too much for HIMS, you're not going to get the best returns. So I'm going to give you the exact price points that I'm looking at for HIMS, and I really hope you enjoy it as always. Now, there has been a lot of developments since I did my last video, and the recent one, which is the reason why the stock is down 9.5% and it's causing a lot of drama, is Cigna. They lowered their copay on Wegovy and Zepbound to $200. So if you could pay $200, you can get an FDA-approved drug like Wegovy from NVO. Why would you buy the same exact drug through their latest partnership on the HIMS platform for $500? You can get it for $200. Why would you pay $500? Why would you pay $200 or $300 for liraglutide if you can get an FDA-approved drug like Wegovy for only $200? So yes, this will really hurt the HIMS business model. And it's this true. Like this, I'm not trying to downplay it. This is a real risk. But there's some things that you have to keep into consideration. The first thing is not everyone is insured. There's a lot of uninsured people. Those uninsured people, they don't really have the option of getting $200 copay on Wegovy from NVO or Lilly Zepbound. So they have to opt in with an option from HIMS and Hers or from another telehealth company. The second thing is that this is only a Cigna kind of thing. Cigna is a big company and it makes an 11% market share of the United States healthcare system. It's not 100% market share, it's 11%. Now, many different insurance companies might end up copying what Cigna did. This is very, very possible, and then it would be a bigger concern. But for right now, it's only 11% of the market, and it's not as big of a concern as many people believe. But the third thing I would say around this one is, yes, $200 isn't too expensive, but many people right now in the United States, I'm just being honest, they don't have $200 a month to spend on weight loss. I mean, if you look at the statistics, we're not having the best economy right now. Not everyone has $200. There's people are defaulting on their car payments, record amount of people, record amount of defaults on credit cards, on companies like Klarna, buy now, pay later bubble is starting to, pop. People just can't pay those loans. Student loans, defaults are also increasing. So we don't have the best economy where everyone has $200 to spend on Zepbound or to spend on Wegovy, which is why I believe HIMS will remain competitive with their oral weight loss option of only $69 a month, and they have like an 80% gross margin on this one. So they can even lower it like to $50, $45, and it will still be profitable and it will still be competitive. So yes, I believe this is a concern for a piece of the HIMS business model, but I believe it's really hard to compete with HIMS for the quality and the price that you're getting for only $69 a month. So I believe the risk is a little bit overblown, but I'm going to say it for the last time. HIMS is not just a weight loss company. HIMS is not just a boner pill company, although very recently they came up with some kind of pill that's, been getting a lot of attention on Twitter, on X, but it's none of those things. HIMS is more of a telehealth platform. It's more about sexual health, dermatology, mental health, weight loss. There are many things coming soon, testosterone, menopause. Menopause actually has been doing very well within women. Hers business within HIMS and Hers for women is growing 100% plus. It's the fastest growing segment of the HIMS and Hers business. But they're also getting into sleep and into other things in the future. They're also getting into, what you would call lab testing, where at-home lab testing, they can get a lot of data and they can help those data for them to detect early cancer. And this is going to be a huge TAM for HIMS and Hers, and it's only getting started. And HIMS, again, doesn't just sell sell pills over the counter where you can get them at Walmart or you get them at Walgreens. HIMS is more of a personalization kind of platform where they personalize the liraglutides, they personalize those oral pills just for you to help you with your side effects. If you would normally get side effects from, let's say, the legacy drug of NVO, HIMS would adjust this dosage for you to not have the regular side effects that you would have. So this specific drug isn't just an over-the-counter kind of drug that everyone uses. It's more personalized for you. And this is a massive area within the platform and within healthcare. And HIMS has around 4 facilities, more than 4 facilities, but in 4 different states for them to do those compounding and to come up with all these kind of things. So I believe it's a very interesting business model. Now, if you look at subscribers, they have been growing 38%, 111% revenue growth, massive revenue growth from the company, and profitability has also been increasing. Cash from operations has been increasing almost every single quarter, which is amazing from the company. And I just want to highlight a few things because many people, again, they still believe that HIMS is the next Teladoc. And this is why I posted on X, is if you look at the HIMS average revenue per member per month, it's around $84 per member per month. If you look at the Teladoc average revenue per member, it's $1.30. I'm not kidding. Go on their website. $1.30 for Teladoc, and HIMS is $84 per month per member. This is nowhere close to what Teladoc is because HIMS is outside the insurance system. If you are outside the insurance system, you will have much, much higher margins than a lot of companies that are within the insurance system. And this is something else that I wanted to highlight, is if you look at the HIMS member growth, they grew members every single quarter from 1.5 million to right now around 2.4 million. But they didn't just grow members. Alongside member growth, they also had massive increases in the average revenue per member. It went from $53 to $55 to $57, $67, $73, and it was at $84. And this is mainly due to cross-selling. So whenever they have someone for hair loss solutions, maybe they can cross-sell him weight loss, they can cross-sell him mental health. Many times those things are correlated together, and many people find everything they need all within one platform, the HIMS and HERS platform. And there's a lot of cross-selling opportunities within the platform, and especially as they continue to expand more and more products. Now, if I look at something else that has happened, and this is a big one, HIMS has raised $1 billion. So now they have around $1 billion of cash on top of their current cash position, and they want to use this capital to move faster, much faster, growing internationally. This is a keyword, international expansion, expanding personalized care at scale, and investing in AI and data to bring precision care to millions. And this is, again, I wasn't really planning on this when I made my valuation model. I wasn't planning on some kind of an international acquisition causing massive, massive growth. But this is going to be a major plus for the company. And they have no debt and around $1.2 billion of cash. Just amazing. And I can't wait to find out what the next acquisition is. And I believe it's going to be a big one. Like, many people right now are trimming HIMS, they're selling the stock. I'm like, guys, if they announce an acquisition on Friday, the stock could go up 20-50% in a day. If this is, maybe they're acquiring Ro, their competitor. Maybe they're acquiring some kind of company in Europe. I mean, you really never know. And if it's some kind of a good company at a good price, the market's going to react very positively to what HIMS could potentially acquire. So that's going to be an amazing one. Now, they also initiated some kind of guidance for 2030, and it's $6.5 billion at least in revenues by 2030. It will likely be much, much higher. But in my last video, I shared something with you guys, which is my valuation model on HIMS based on the $6.5 billion outlook, using 3 times sales, which is the worst case scenario, 5 times sales, which is the mid case scenario, and 10 times sales, which is the best case scenario by 2030. Now, if we take the mid case scenario at 5 times sales, I came up with $145 per share. If you want to take some dilution, maybe that's like $120 per share. So if we take 120 and you're paying right now around $53 per share, so maybe you could get like a double or 2.5x over the next 5 years. This is really not exciting at all, with a company like HIMS that's more risky than a traditional company that's very volatile. So I think $53 per share based on my outlook for 2030 on the mid-case scenario isn't really too exciting. Now you could still make money if the stock goes to 145 in 5 or 6 years. This is really not bad at all. But if I wanted to take some margin of safety with this one, like if I wanted to pay some price where I could make 3 or 4x over the next 5 years, which I believe is warranted with a riskier company or a growth company like HIMS and hers, I believe under $45 is a sweet spot. So if you can get HIMS at $40 or a little bit, maybe close to $40, $42, $43, not financial advice, but I think in the low 40s, like under 45, it's a really good spot to really be looking into HIMS. I mean, I can't believe I'm saying this. I used to say it's under $10. My last one was under 30. Now I'm saying under 45. I mean, I can't believe it. But the fundamentals keep on improving. And those calculations, they don't include a potential acquisition. So if they acquire something, it could be much, much higher. But a forward PE of 72 right now, I'm just being honest, HIMS isn't too attractive. It's not bad, but it's not too attractive. Now, if you want to pay something that's fair or close to fair value or a good spot, a good range to be buying HIMS, in my opinion, it's the low 40s. So 42, 41, $40, especially under $40, it would be a steal. But anywhere close to $40, if you don't have a position, I believe that would be a great spot for most investors to be looking into HIMS stocks, given all the fundamentals remain the same and nothing deteriorates within the business. So that was my outlook and my buy price and my analysis on HIMS and hers. It's not financial advice again. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.